Hey, what's going on, everybody? It's Jeremy back. Today is August the 3rd, Saturday. So, happy August to everybody. Also, really quick, just want to say thank you to everybody that, excuse me, tuned in earlier this morning. I actually started to do weekly bias yesterday via, I think I had like my video camera up, so you'll notice this week you see the full screen. Don't see me. Um, I was up till about say maybe 3 this morning. Just not so much couldn't sleep, but just idle mind. But it wasn't idle like I couldn't think of anything. I was just toiling with a couple of ideas and decided to get into a couple of crypto positions, which I did just live stream through the YouTube channel here. A couple small ideas and concepts using Power of Three, and yeah, just something to do. And so, thank you for those that actually tuned in to watch. I noticed, and I had to laugh a couple of times. I noticed like some people came in, they watched, and I indicated like using a path tool, like, hey, what I thought was gonna happen, and then I'd see like that number like as it started to deliver, like the number would reduce, and it was only like a couple people at a time. I'm not gonna make it seem like it was like 50, 60 people. It really wasn't. It was like I think the max at a given time was like 4 people watching, and then as soon as it started moving, like they just were uninterested any longer. So I mean that's cool. You get that with anything. I'm not looking at. I wasn't doing it for the the viewership or watch hours or anything like that. Like I've said from the outset, I'll continue to say it because it's what it is. It's more of a documentation thing for me. It's more of a video journal, if you will, to kind of go back in and look at some of these ideas. And to add to that, someone could say, well, if it's your video journal, why would you live stream it? If it's a video journal, you just record the session and save it, or you could record the session, put it up on your YouTube channel. You're right, I could do that. Um, I guess there's a part of me that feels like I'm still doing that. Um, the beautiful thing, at least at this point, about YouTube is it's it's free, and by free, what I mean by that is I can put my information out here for anybody to engage in it or look at it, and it's not really costing them anything more than their time, right? Um, that again, back to the core emphasis of why I've always said just the video journal, doing these types of things like the weekly bias and whatnot. Like my weekly bias videos are not for anybody to say, oh my gosh, he's building a cult, let's go follow him, let's go subscribe, and then I'm like I've got 500 or 1,000 now, I can sell a course. Like I don't have any of those ideas, and I'm not saying everybody out there that does that does, but I look at it again from the perspective of 4.5, 5, 6 years ago when I actually started down this path. I didn't come across. I'm not saying they don't exist. I'm saying I didn't come across anybody that was legitimately and genuinely putting information out, saying, "Hey, listen, look at this. Go back test this." Not saying, "Hey, go look at this. Go back test this. This works." They were just simply saying, go look at price, go examine, go evaluate, look and see if this replicates, look and see if you can identify these key areas, these specific things, and see if you can take advantage of it. Simple, you know um, cut and dry, down to the bare bones. Some could say that Inner Circle Trader did it, ICT did it. um, I know I'm gonna butcher his YouTube channel, but I think it is uh, F FAIMC underscore SMC. Um, I'll put a link to his channel in the description below. He is one individual, um, has an outstanding YouTube channel, has an outstanding YouTube fellowship, and does an outstanding job, in my opinion, of just making what could ordinarily be like complicated processes relatively simple. And the crazy thing about him is he says the same thing that I've been saying, which is just go back test it. Simple. Like, hey, here's a concept, here's an idea, this is what happens, this is what you should be looking for. Go test it. And that's, that's the beginning and the end of it. Now, whether or not he sells courses and Discord and all of that, I don't know. But the point is, 5.5, 4.5, 6 years ago, whatever it is, I didn't come across that. I didn't see that. I also wasn't looking for the get rich quick, and I still couldn't find um, anybody that was gonna, I don't want to say point the way, but point the way, right? Give you a concept behind a concrete idea of what signature you could be looking for, or what may draw you to certain areas in certain time frames. So yeah, that's that. So again, quick thanks to everybody for earlier this morning. So just kind of looking back at this previous week, I can turn that off and then just get rid of that for a second. So obviously, this last bearish candle is this previous week. So as you can see, and I just want to take you back and show you something. So here from the weekly, we don't have any annotations, no lines, no nothing, right? So let's just go back. So this was this very most recent week. This was the previous week. Okay. This is all I'm going to say about this, and then I'll get into it because sometimes I can get like extremely chatty, and yeah, the 25, 30 minute videos turn into like hour videos. So let's just start here and then just look, right? So there are a couple of things that will kind of give away or give you an initial bias, and then you just allow price to kind of either round out that narrative bias for the upcoming week, or for it to invalidate that idea of bias for the week. So previous week candle opened within the body of this candle. It gave you a wick into the previous body of this candle, didn't give you a wick to maybe 50% of this candle, and then decided to trade short and closed below. Now, you can always do this. It is not always, as everything else that I've ever said, it is not 100% guarantee. However, it's a probability. You approach it from a probability standpoint. There are a couple of things looking at these two candles and then looking back across at what's happened over here. So at some point, we know what the point was, so I'm being a little facetious when I say this, but you have a fair value gap, this candle wick low, this candle wick high. All right, you see that? This candle wick high, this candle wick low. There is a fair value gap in here, right? Inefficiency in price. When this candle opens, it rejects into this wick, takes more than 50%, irrelevant at this point. And the reason I say it's irrelevant is because we're looking necessarily to see what is the reaction from here. Okay? Because this candle is going to dictate essentially what happens in the future. All right? So just stay with me for a second. It'll make sense. So opens, pushes high, rejects, closes back, and closes below the body. And albeit, doesn't matter what the candlestick pattern is, it doesn't matter, right? Doesn't matter. This is a doji candle. I can't think of the name off the top of my head. What the candlestick name is, but I think it's a tombstone or inverted. It's a tombstone, I believe. But that's the candle body. This candle body closes below this candle body. but it wicks into this fair value gap. So, two concepts at play. There's a fair value gap that's here. There's an inefficiency here. So even though the body closes below this candle, it's tapped into an area in which price is possibly going to mitigate, come back deeper, and then trade off of that, or it's just going to go. So the following week, obviously, you're going to wait and see, and it does indeed, it trades off of this. Now, I've said in the past, I know that there are some educators that will say once a fair value gap is tapped into, it's used or it's spent and it's no longer valid, and they go through all of that. Okay. I'm not necessarily one of those individuals that says that, because just in my experience, I've seen a fair value gap be utilized more than once to bounce and to reclaim and to pair orders before essentially at some point failing. Okay, so that is just, that's my opinion. So one entry or one mitigation into a fair value gap does not immediately make me think it's no longer valid. That's just okay. So this constitutes, this is a one tap. Okay, so the fair value gap has been entered into. Eyeballing this, that's not the consummate encroachment. Consummate encroachment is going to be like somewhere in here, right? Price rallies away. Then we get into the backside of July and bringing us to present. So we know what happens here. We know what happens here. So back to these two candles. So here's a situation where it becomes a little bit more realistic that, hey, this closure closed below this entire body and wick. Okay, it's closed back inside this fair value gap, which has already been tapped into. Okay, it has pushed away a little bit, but it did mitigate a little bit deeper, a little bit closer to that consummate encroachment. Not quite, but almost, right? Now, last week's candle opens, it pushes off, it rejects again, less than, and then it expands. And now what has it done? It's essentially completely negated this fair value gap, this bullish fair value gap. So once this candle closed last week, it does not mean 100% like, hey, price is not going long. What it tells me is if price is going to return back to longs, it's going to be in a shorter term, because there's an idea, or at least at this point, there's a sentiment that we're trying to reclaim, we're trying to pair, we're trying to seek some sell side liquidity before that resumption long occurs. So we're looking for something. Okay. At this point, and I'm going to go back just 1 week. We could process this by simply saying, okay, so you've had some sweep of looking at this from a short perspective. We've had external liquidity taken here, up here. This would have been an internal liquidity sweep. We have internal liquidity swept out. But on a lower time frame or a higher time frame, depending on your fractal perspective, this move here was going to take some more external liquidity before continuing and closing short to take internal liquidity. I hope I'm not losing anybody, because that's the way you can start to look at time frames and look at candlestick structure to understand what exactly what in the hell's going on. So again, external, this is internal, this is an internal run here. This is external liquidity taken. This is going to be internal liquidity taken. And why is that important? Why am I bringing it up? Because in this week's candle, this week that just passed yesterday, we had external range liquidity taken in this wick. And here again, this is a clearly defined low. And this low is defined by this candle and wick being above. and this candle wick and body being above. So this is a clearly defined low. There's another way that you could also say or look at this and simply think to yourself, what's happening here? There's also a fair value gap here. This candle wick high, this very small candle wick low, there's a fair value gap there. The wick initially did the damage, the body told the story that it was going to continue longer. But now that prices rallied away, there's sell side liquidity that's resting down here. So this previous week saw the external range liquidity run when the week opened, and then it rallied and it trailed short, and it cleared the sell side liquidity. So just on that idea, that concept, I'm going to bring your eye to something else because of this previous week. And I'll add my annotations back on here. I had my magnet drawn and I had this low also drawn on. We've cleared that liquidity. I'm actually, while we're doing this, I can always seem to be doing that. Sorry. Get that back. There we go. All right. So I can start to kind of get rid of some of these now. And hopefully I didn't mess myself up. No, I didn't. I'll remove more as we as we go. I'll get this. More than likely, I'll get this cleaned up this upcoming week. But I wanted to at least start out by explaining like that concept and why, and not so much why what I'm doing or what I did or whatever works or whatever, but just to kind of give you an idea, give you a framework of what's going on. But now I'm going to give you another piece of framework, and we're still on the weekly. If you notice, I'm going to draw this out for you because this is now going to give you a different kind of context as well. Oh, well, we already talked about this one. I'm sorry. Sorry. It's this one. Now, you will look at this and you will say, Jeremy, what are you doing? That's literally, that's a very thin fair value gap. It's very thin. Very, very thin. You're right. It is very thin. It's a very thin fair value gap with a massive amount of price in it on a weekly time frame. You're absolutely right. Now, at first glance, you would look at it and you would say, "Oh, what's what does that even mean? What is that? What's that supposed to be?" I think I'm gonna leave that because I think that we had might have had an imbalance or something in there. That might have been why. I don't want to delete that without being able to scale down and see what that is. But this is where you could say, well, there have been instances that have occurred before. So what's possible, right? What would be possible? Because we see here that the wick did the damage on the previous fair value gap here. It pushed up and then eventually it came through and it failed, right? So now we've actually had an entire fair value gap. So this fair value gap, by the way, this one by these three bullish candles is still being respected, even though we've moved back into this area, right? However, what you have noticed is just looking at how prices delivered over the last several weeks and months, we've had this fair value gap up here that has failed. We've now had this fair value gap that's been wicked through, and essentially, you could say that it's failed only because you've got a body closure that will take you beyond 50% of the consummate encroachment here. So you've had this one wick, not all the way through, but you've had a considerable wick that's reached through. You've had a following week's candle that's reached into essentially the consummate encroachment as well. It did rally away, but now when prices come back, prices punched right through that level, and you'll get a body closure. You do have a wick rejection on the weekly. So what does all this mean? Probably like Jeremy, like, okay, we see all of that. That's obvious. What does that mean? What it could mean is the same thing it meant over here, same thing it meant here. At the beginning of this upcoming week, you could see one of two things occur. But I'm going to not give you the option. I'm going to tell you the likelihood, and I'm going to tell you again what I would anticipate, which is going to sound, again, eerily familiar to the bias I did last week. When the market opens, I am going to be looking for a temporary or a very short term interterm run long. That's what I'm going to be looking for. Why would I be looking for that? Because last week we saw, under the pretense of looking at a power of three from the weekly, we marked out our 4 hour high. We marked out our 4 hour low. Well, an interesting thing happened. Strange phenomenon occurred last week, which I think may actually repeat itself. It may take a little bit longer this week, I believe, but inevitably, I think that we will still see another week of the 4 hour high, that buy side liquidity taken before the sell side liquidity gets taken. Um, that's just based upon this weekly candle. So if you look, every weekly candle that's wicked and closed down, the following week you did get a mitigation here. So you could argue and say, well, no, that's not true. In this particular week, we didn't get the rally long. What we got was the mitigation short. We got some recapture here in the wick, so it moved back in the direction it was already moving in, and then it moved away. Okay, fair enough. But if we're gonna look at these last 2 weeks, what happened here? You did get a move away, or excuse me, to move down, a deeper mitigation, and then price closed. And then the following week, which was this week, what happened? Price opened, it moved long. So somebody would look at this and say that doesn't really look like it's a short-term move. That didn't just happen really quick and come back. Okay, perspective and perspective is going to be to the individual. So it's whatever you determine is long-term or short-term. I would look at this as a very intermediary or very short-term. Why would I look at it that way? Because it's a wick. If there if we had body closure, if the body was up here all the way down here, then maybe that's not a short term or intermediary move. Anything that's producing a wick, that's going to be short term for me. The substantial move occurs below this candle body. So in my mind, when it closed, this was short term long. Let me go grab some buy side liquidity out of here because we're going to continue short. So in this instance, because now this is somewhat of an area of interest, we've tapped into that on the weekly, and price rallied away and it closed above it. So from a probabilistic standpoint, for me, I might very well be looking for either an open just below, as we had here, or an open just within the confines of this previous week's candle. What would be the difference? The difference would simply mean if we have an open within this lower third of the previous week's candle, you may actually see a portion of body closure up here. Hell, it's the first full week in August. We may actually see a week of it might be a bullish doji. with a wick that's actually maybe gone through the consummate encroachment. Wait, we just really don't know. Don't know. If there's a body opening within the previous week's body, it's possible it'll take price a little bit longer. Possible. I'm not Nostradamus for charts. I don't know. But is it possible? Yes. My ultimate bias is still we'll see an intermediary run long to acquire or gather some liquidity and a continuation short. That continuation short may tap into the consummate encroachment of this fair value gap, but again, based upon a little bit of preponderance of previous evidence, this fair value gap held, allowed the buy side liquidity to be accumulated, taken, and the distribution through. So this one has failed. This one has now essentially failed. And now, I don't know about you, but again, from a probability standpoint, I'm not holding my confidence that this will now all of a sudden rebound right back up. I think in part it is possible, it might be possible, because this wick is also showing you in a fair value, being offered as fair value, this could be a short term low. So that's one of the reasons why I wanted to take a little bit more time and go through this entire process. Um, you're probably now asking, what the hell does he mean? I'm going to take you back up here to this candle, and I promise we'll get on with the weekly bias. But these are things, like I said, I wish somebody had talked to me, walked me through, or at least just pointed me to in a video to where I could go, I can go back and look at that. This is one of those things. And I'm just going to say it in plain English, black and white. I'm not going to take you through too much. Okay? Here it is in plain English. Whenever you find a high or a low, a swing high or a swing low, inside of a fair value gap, whenever you see price moving in that direction, moving towards that low or towards that high, you should always consider how price is delivering before it gets there. Meaning, in a case like this, right, you've had external liquidity that was taken, you have external liquidity taken, and then a closure like this, excuse me, this closure back inside. You can't always assume. You have to make sure that price and everything else, your personal bias, your trade plan, like that criteria is met for you to say, okay, price is moving back short. Whenever you see them in fair value gaps, and there's been a previous raid or run on liquidity on the opposing end, it is reasonable. I'm not saying it's 100%. I'm saying it is reasonable that that high or low will be run. Okay? It's reasonable. And it's reasonable especially if there has been the opposing side's liquidity taken. That could be the opposing side liquidity taken via a sweep. That could be the opposing side liquidity being taken based on a run, which means you've got body closures, you've got other substructure developing, you've got interterm liquidity being created before a change or a sweep, or no, not sweep, excuse me, a shift in market structure, a break of structure in the direction of that low or high in the fair value gap. So in this case, you could say this is basically a sweep on liquidity, a retracement, and then immediately it comes down, it closes below, it takes that out. Following the subsequent week, closes, takes the fair value gap out. Lows or highs in fair value gaps are probable targets. That's the thing to take from that. Um, to come down and to look even at this, you could say, okay, well, what's the deal with this? Well, I annotated this on my chart. This technically is still in this fair value gap, even though it's not within the confines of what we would determine as fair value. It's wicked through the consummate encroachment, but the body is above. But it's still within the confines of these three bullish candles that make up the fair value gap. It's still in the confines of the fair value gap. Okay. Don't get a body closure, we get a sweep. We get a sweep. So again, the sweeps will typically, not again always, the sweeps will typically rally back to another base point and then essentially run, which brings us to this week and this wick. So we've cleared the previous fair value gap low. This low has been swept. So there's a rally, which is why I say interterm long, accumulate, gather some sort of buy side liquidity, and then potentially short and close below this wick with the body closure. So what am I looking for? What am I looking for next week? Um, Continuation short. Now, one more thing, and this will be the last drawing on this weekly. We'll drop to the 4, and then I'll pretty much wrap this video. I'm going to change the color of this one though, so we can just differentiate between the two. Okay. This is another fair value gap. It's a very small fair value gap, but I mentioned that, and oh, look at this. What is this? That's another low. That's another low sitting at 17373.25. That's this candle. That is this candle. 17373.25. I'm not telling you it's going to be next week. I'm not telling you it's not going to be in 2 weeks. I'm not even saying it's in the next month. What I will say is, just like I have my magnet here for price to come and clear this, I have a magnet here to come and clear this. Now, the expectation would be, just looking at price overall here just for a second, and like I said, we will drop down. I can get rid of this one because this is going to clarify something. Should clarify something. And it does. Beautiful. So I look at fair value gaps and inversion fair value gaps. I'm going to pull this over here for a second because you can clearly see, right? We would agree that's a fair value gap, right? Okay. Well, let's just look to the left. We can get rid of this here. Let's just look to the left here for a second. And by the left, I'm talking about, I'll zoom in so it's clear and you know exactly which ones I'm talking about. I am talking about this candle, and this candle. Okay? So if I draw this like this, after we have this bearish candle push down, this candle open, right, push back up, what do we immediately have? What we immediately have is, well, you've got a low sitting here now because this candle obviously is not lower than this, and neither is this one. So we have a clearly defined swing low, right? I think we would agree with that. The other thing I think we would agree on is the fact that from this candle and wick low to this candle wick and body high, that's a fair value gap. I think we would also agree that this is a bearish fair value gap because price has moved down and through, created a low based on the closure of this candle, And this wick gave us a fair value gap. But something happened. This bearish fair value gap did not hold. It was run through. But I digress just for a moment to share something with you. We have an inversion long because this didn't hold, right? But we also have something else that occurred. I have to change this color again. Good grief. And this is not me. This is a gentleman by the name of Dodgy that actually brought this to my attention. I'm gonna link his YouTube channel in the description as well, because when he opened my eyes to this, and I had been seeing it, but I couldn't quite process it, and I'm okay with saying that I wasn't processing it correctly. When you basically have a fair value gap that looks like it should be bearish, or it should hold, or you think it's going to hold price, it'll reject and it'll continue down, and it fails, what it does, especially if another fair value gap forms off of it, it gives you the context to be a little bit more secure in understanding whether or not that fair value gap will hold. Okay? So this is somewhat key, and this will maybe explain why I'm taking a little bit more time on the weekly looking at this, doing this bias. Maybe it will for some people, and maybe some people will just click off and be like, I don't know what the fuck he's talking about, and that's fine. The fact that this bearish fair value gap did not hold and we had this massive rally long, bullish, we're now coming back into a place where we have a bullish fair value gap here, right? This is the bullish fair value gap here to here. This is the bearish that was inverted. So this is an inverted or an inversion. And I actually have that in here. I just call it an IVG. IFVG, an inversion fair value gap. It's an inversion because price ran through it. It came back, it tapped back into it, and it took off. That's what made it. So this move here, this wick back in to this fair value gap, let me know, hey, it's an inversion. It basically said, price came up and said, hey, yeah, thanks, let's think about it. We're gonna think about it. Yeah, we're just gonna go to the top. Thanks, and we'll see you later. And it took off. Well, that see you later is about to occur over here. Okay? And what could occur, which is why this is drawn out and why I said I don't know when this is going to get taken. We'll have to see. Could be this week, could be next week, could be 2 weeks, could be a month. We don't know. Inevitably, it will be. Somebody could say, well, that doesn't make you any different than anybody else. Inevitably, everything is taken. You're right. But the probability of it is a little bit greater than we know it's going to happen at some point in the future. The probability is higher. Why is the probability higher? Because once you have this inversion fair value gap, it's been tapped back into, prices rallied away from it. Do you know what you also have? That's not a low or a high, is it? No. What you do have is the ability to come back and pair price. You have another opportunity to rally long to create some more interterm liquidity, right? But you do have an opportunity in this area, in this blue area. I'm going to make it really big so it's really, really obvious. This area here, you have an opportunity to create a low, meaning a swing low or a swing high. The likelihood is that you're going to create, just based on price delivery, and this is the other reason why I record these videos on YouTube, because at some point in the future, at some juncture, somebody's going to pull this video up and price is going to be so much further away from this area, and they're going to go, what the fuck? Holy shit. Holy shit. He had a clue of what he was talking about. Not that dude knew exactly. No, they're going to say, fuck. He had a clue. He had a really good sound understanding. I would suspect you're going to get a low formed in here. Why do I say low? Why am I looking for a swing low there? Because even though this ran all the way through, you had a swing low here. You had a swing low here. And what happened? In each instance, price ran through it. In each instance. When price is bearish, you're looking, and if your expectation, if your bias is bearish, if you have to wait a week or 2 weeks or whatever it is, that's fine. You should be patient enough to go back and analyze previous price. And if you're analyzing previous price, you can start, just look at the fair value gaps and look at highs or lows that form there. And then ask yourself, where is price coming from? Where is it likely going? Okay, if it's going towards that high and it's coming from a place where it's swept sell side liquidity, it's created some more liquidity. Just ask yourself, okay, is there another high to be run? Is there a fair value gap before we get to this high? Oh shit, the high is in the fair value gap. Okay, let me use this as my point of interest and my target. Well, we're not here yet. We're getting there. So, in my mind, I would be looking for a low in here, and maybe another interterm, or maybe even hell, a rally higher, because now we're at a place where, again, looking at the weekly, I'm going to say this and we're going to go to the 4 hour and then we'll do some more analysis there. This next candle is going to tell a story. It's going to tell a story as to whether or not we're going to get a fair value gap from this candle wick low, this candle that's already formed, and if we do get the open, a wick above, and a closure below, you will now have a fair value gap parked here. To do what? Either maintain and hold price to run short, or to do what? Take whatever sell side liquidity it can and continue to run long for whatever the liquidity or the pairing of order or the inefficiency seeking is that's required, needs to be taken. Okay, so that's one of the reasons why I've spent so much time this week on the weekly showing you that, hey, it would have been easy for me to go, hey, look at this, we're probably going to get another fair value gap. Context, because I could have said, yeah, this week we'll probably get a wick and this might turn into a fair value gap, and then we're looking, but what do you have to base that off of? Like, what would your target be? Well, I'm just showing you what mine would look like. I'm not telling you that these should be yours. I'm just showing you what would I be looking at based on what's already happened. If there is a fair value gap that forms here, where is it possibly reaching to? Where might this week's candle stop? Possibly in here. Maybe it stops up here. Maybe this is too obvious. To the untrained eye, it wouldn't be. To the trained eye, this might be an obvious place for a wick low for this week's candle to stop. Because then you've offered fair value above the weekly range. You've made it abundantly clear that, hey, this might be a point of interest at some place in the very near future. Or, depending on whatever sentiment, this and this low could be. That's why I said, don't know. This week, 2 weeks, a month, but it might very well be in play. Don't know. But that's your contextual idea for the week. I know you're like, you took 40 minutes to, yeah, I did. So, you'd be like, you asshole. All right, so on the 4 hour, so this week's candle open is not going to change the fact that I can actually take these off because they've done their hitting the mic again. They've done their job. So I'm going to go ahead and I'm going to put this here because regardless to where price opens, this is going to be our 4 hour low. So I'm just going to go ahead and annotate this is going to be 4 hour low and make that, I don't know. Um, I'm horrible at these colors and the size and all of this crap because until I started doing these types of videos, like I would do it for myself. I mark my stuff out, and I kind of always knew like where all the arrays and the annotations and the stuff was, and where they were, and what, you know, what I was looking for and all of that. So I have to change that up just a little bit, make it easier for everybody else to like squinting that already can't see. It's like, what in the absolute hell? So that's gonna be the low. Now here's where here's where it gets interesting. Okay, here's where it gets interesting, and here's also where I'm gonna get rid of. I did tell you I was gonna like clean a lot of this up, so we're gonna get rid of all of this in here because I've been taking you through the whole fair value gap. What are you looking at? What are you looking for? Where is this going? Where is this coming from? Blah, 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 blah. Right? Right. Sadite. Okay. So here's the reason why. This is a clear 4 hour low. So do you remember just talking to you just a few minutes ago, and I said highs and lows in certain areas, right? Highs and lows in what certain areas? Fair value gaps. So typically, I would have my two horizontal rays drawn out saying this is my four hour high, this is my 4 hour low. Well, I'm not exactly doing that in this case. I am, but I'm not. And the reason is because there's a dual context in this upcoming week. My 4 hour, man. I have to make this. I think I made the other one 28. Was it 28? Let's just make it 32, or forget. We'll make it 40. We'll make it 40 because you can see that. And then the midline, we'll make that black. All right, cool. Okay, so this one's gonna be a little different. However, just to keep it consistent, to be consistent, this, because it is a high. Wait, let me get rid of some of this too, because all of this has been cleared and we've worked through this price already. I'm gonna leave that there though, because that actually is some level of importance. There's a volume. It is very small, but it's a 4 hour volume imbalance that is sitting there, and that could actually be the stumbling block, so to speak, for this. Because volume imbalances don't just occur arbitrarily and just the weirdest places where there's no relevance or there's no bearing. Okay, a volume imbalance is sometimes, again, this is just my opinion. I'm not saying this is absolutely 100% of the reason why, but I look at it from the standpoint of just in case there are other technicians, shall we call ourselves. I like to use the term technicians for retail traders. There are some technicians that may understand that this is a particular signature in price. This is also a particular setup structurally that you would look at, and you might miss this. You might not see the volume imbalance here. Your eye might just be drawn to the pattern that, oh, there's a break of structure, this came down, oh, there's another break, we're going short, oh, this came up into this fair value gap, this held, this is a protected high. Somebody might have said, they might have put basically a stop right here and said, okay, this is protected. So even if price comes back in, it'll tap into this fair value gap and it'll continue short, because that's what it's been doing. Short, 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 short. It'll come back up, it's going to continue short, right? And the reasonable expectation is there's nothing wrong with that. However, this could be the thing that sticks its foot out and trips you up. That I look at volume imbalances as this is the composite operator always telling you that they're in control, regardless to whether or not you've got a beat on what they're doing, whether you know what the manipulation or you have a really good idea what the manipulation is. If you're just looking here, you'll say, oh, easy. This is easy peasy. You guys are going to raid and you're going to tap into this 4 hour and you're going to mitigate lower. But everybody that's not paying attention, there's buy side liquidity up here. And even if you just sweep this, it's still within the confines of this original. So you just sweep and go. Yeah, you're almost there. What if you tap, deliver, run the fair value gap, sweep, come back down, tap this to make somebody think we're going long, because now you've inverted this 4 hour fair value gap to make people think you're going long, only to get to this volume imbalance, which, oh, by the way, I'm not going to draw another box. I don't want to draw another box on here. I'm just going to zoom in and I'm going to show you. The volume imbalance is being held by this damn candle right here. Right here. But it gets deeper. Like the freaking rabbit hole is very deep. But I will just bring your attention to that volume imbalance. Should we get back up here? Okay? Because I did tell you interterm high we'd be looking for. Now, if price opens and it runs this low immediately on Sunday, I would be patient. I would be very patient. And the reason that I would be patient is because, in my opinion, it would be a false move. One of the few times I would actually say that looking at it, and I may actually just sit on my hands for the week, because it could give you the dynamic that it comes back up, taps into this the underside of this 4 hour fair value gap, and then it runs it again to come up. So basically just whipsawing a couple of people to get you caught any idea that it's going to deliver, and then it fails, comes back, stops some people out that basically take whatever market structure shift that occurs here, not here, but in here, takes you out, only to continue to eventually come back. So price opening on Sunday, I want to see it open inside here. I definitely want to see, and if it runs long, that's actually a better scenario. I would not like to see the 4 hour low taken. I don't want to see it, because it will, in my opinion, set a standard or a priority for the week. That means that the week is going to range. It's the first full week in August anyway. So it would essentially just tell me, okay, don't do anything Sunday, and definitely we're not doing what we did last week. Don't take a position Monday. I would actually have to take a position on Tuesday to see if there's been any kind of liquidity buy side sell side taken for Monday. So these would be my areas for 4 hour though. Dropping shit. These would be my 4 hour areas. I'm gonna annotate this for you to be the 4 hour high, and we've somehow managed. I've totally managed to make this an hour, and that's gonna be high. Now I can't spell high, and I think that's the same color. Put that on the right. All right, cool. So this is your range. That would be my range for this week. So once price does whatever it's gonna do, Like I said, I personally would like to see price open inside this range, run long, take that high, and then trade back short. I would have more confidence, honestly, in that occurring than sweeping out the low to run the high. Now, that might sound contradictory because I always say, well, whatever side gets taken first, that's the side that price typically will run to. Well, that is true. Um, but if you follow the amount of time that I spent on the weekly time frame to understand context, at least my forward looking bias and that forward looking context, I am not looking for that extreme low on the weekly to be taken quickly. Like the money that people make and take absolutely is not, I mean, it can be made quick, but you make more money taking other people's money. So the longer you can keep, your secondary money, your slush funds, your kids uh, trust fund accounts to continue to grow, you're just going to accumulate more money. So this initial sell side to be taken initially doesn't really show that that's going to be indicative of you looking at long money. That would be indicative of short money. Now, there is an idea. I will say and share this, and then I'm going to wrap this video up because I've kind of given you my bias. So just for anybody that just kind of doesn't want to hear this and you want to go, my bias this week is a short-term high to take out this 4-hour high. Watch out for the volume imbalance and a short. So by the end of the week, I'm looking for price to be below or into this area. So I'm looking for a short for those of you that just want to go. So thank you very much for those that just wanted to hear that and go. I appreciate your time. For everyone else, this is the idea. If we're going to run this short, this to me wouldn't necessarily allow you to accumulate more orders in terms of what you could take for liquidity to reestablish your long term objective. And I'm talking about the composite operators. If you're trying to accumulate more to, double or whatever, it would make more sense to open price in here because what you want to do and what they've been, pretty, I don't want to say that. I'll just say they've been very calculated in their moves. Okay? And the calculation is always going to be based upon misdirection. So, if the ultimate objective is short, what are you going to do? Right? It's like dodgeball or anything else. If the ultimate objective is to not get hit by the ball, what are the things that you look at or look for? You look for tendencies, you look for people to think for you or to assume that if they were you, they would do what? Okay? So, if the commitment of traders basically say Nasdaq is short, S&P is short. What are we looking for this upcoming week? Some speculators would just simply come out and say, "Well, I'm looking for continued shorts." Okay, from where? And then they would point to an area. Somebody might look in here at the 4-hour, and that's not a bad area. Looking at it, there's a fair value gap here. There's a break, right? So looking at this, somebody might look and say, "Well, shit, there is this 4-hour up here, but there's this area. Why didn't I draw this out? Why didn't I? Because that's not obvious to me. Is it a break? Yeah, kinda, but it's not obvious. This is like, what do the five fingers say to the face? Obvious. That's what this is. This, not so much. This is like, hey, I can't use that analogy. That sounds bad. This is kind of like I'm selling $1 dollar cold waters at the red light up here because it's 98 degrees. Will it be seen? Yeah. Somebody, people really going to be paying attention to that? Depends on how thirsty they are. Now, if this is, hey, we're selling pineapple juice, water, de uses, cervezas, everybody's going to see this. That was a crazy analogy, I know. Don't kill me on that. That's just where my brain went. I went to bed late. I know it's like 12:30 now, but don't just whatever. So I would be thinking, I want to see you open in here, and then you can create whatever interterm ranges you want. We could do power of threes from the 4 hour down to the 15. You can go from the 15 to the 1 minute. So are there moves still available to be had in here? Absolutely, they are. Absolutely. But from a longer time frame perspective, I would want those interterm moves because if somebody is on the wrong side, which there'll be a lot of people, I might be one of them even doing this, we can always be caught out. You can always overthink yourself sometimes. But how many people, how many speculators within that commitment of traders that are like, oh, we're short, continued shorts, are going to see along and go, well, maybe they're going here short. Oh, well, maybe we're in the shorts. Well, we're going to go back long. Oh, well, maybe it was the mitigate short. Like how much are you going to be able to accumulate by doing that? Whereas somebody like me is going to simply say, hey, look, if I can't find it on a 15 minute to a 1 minute, and it's a very small move that I look to take out a very short term buy side or short term sell side liquidity, I'm not interested in the long term move. Why? Because none of the long term targets or the long term point of interests are close. They've either not been mitigated, they've not been run, they've not been swept. So I don't even need to look at those. I'll look at a very short term, a very small uh, intermediary time frame. Like I said, a 15 minute to a 1 minute is somewhat ideal based upon the delivery of price, where price is coming from, where it looks like it's going to, what are the highs and the lows within that very confined range. I did say confined, yes, because it's going to have to be something that not is absolute, but it has to be something that there's no ambiguity in where price is reaching or what it's going to clear. It has to be very specific. And if it's very specific and there's nothing, ambiguous about that range, then so be it. Does it mean that it's still going to deliver 100%? No. There's still that same area of you're just looking to line up with what is the most probabilistic delivery within this confined range. That's always going to be the case. It doesn't matter if it's small or even if it's long term. It's the same thing here. If we get this 4 hour fair value gap tapped into, I need to drop down to a 15, a 5, and a 1 and see what's happening in there. Did it run away? Is it hanging out? Is it trying to decide whether or not it's going to go, you know, uh, knock on the 4 hour highs door and say, hey, you want to come down you want to go downtown with us? We're going downtown to sit by the river and sip mai tais and whatever. And the 4 hour high is like, yeah, but let me go get, my homie the volume imbalance because they said they wanted to come too. Like all of those things factor in. And in order for the composite operators to gather as much as they can possibly get within this kind of a confined range, they're not necessarily going to be saying, hey, let's just go ahead and run this and then run all the way back up here and run back down. How, like, you're shooting yourself in the foot. How many people are going to be waiting for that move? How many people, when you get up here, are going to be waiting for that move? So, what's the best way to accumulate everything and still get what you want and still have the ability to do what you'd already decided you were going to do? Operate within the range. and allow people to see displacement and become impulsive. Let them see this is a continuation. So when the market opens, they go, oh, that's short term, short term. First opportunity I have to sell, I'm going to sell. And then you buy them up to maybe sell them. But you don't really want to go, but you're going to buy them back up. Now you're going to invert and you're going to sell back into this just to prove that, hey, look, I want to go long. And then you sweep and you come all the way back down. And I don't know, somebody says something, somebody does something, and you run that new area that you swept back up into a volume imbalance. And now you can take this move and you can go to Middle Earth if you wanted to. Just my thought. But um, I'm used to doubt. I'm used to. Um, I consider myself not a comedian, obviously, but a fairly humorous person. I'm gonna find humor in a lot of different things. So, somebody would watch this video and be like, "That guy's like way the fuck off his rocker. Like he is gone." But I can appreciate that because that ultimately means that I can continue to fly under the radar, do what I do, offer whatever insight to whomever else is out there that is similar to me, that's like me, that will take some sort of value. Because I feel like I'm not talking to everybody when I do these. Even the people that know me probably hear what I say sometimes, and it doesn't necessarily resonate with them. And that's fine because at the end of the day, as I've just said, it's not for them. And I think that's one of the very interesting, and I honestly look at it as a very beautiful thing. We all may speak, similar languages in terms of being able to communicate, to understand simple ideas and concepts between one another when it comes to life ideas and things like that. When it comes to speculation and the technicians that operate in this space, we could all essentially be speaking similar language. You know, stop loss, take profit, range, high, low, buy side liquidity, sell side. Like you could talk to anybody that trades, they're gonna understand those terms. Um, Divergence, SMT, um, O, OL, HC. Like you can go through all the acronyms. People are gonna understand, but to that point, I will stop. I will say that, and then I'll use that as a launch pad. So OLHC, you'll lose some people. OLHC, OHLC, you'll lose some people. I was one of those people years ago, lost hearing that. I understood, well, I didn't understand fully, but I had an idea. I had the conceptual idea of what my take profit, what my stop was. Okay, I knew market order. I knew what um, a limit order was. But as soon as somebody said something like OHLC, I'm like, what the fuck are you talking about? That is a dynamic in the language and in the structure of understanding what you're looking for. Open high low close, open low high close. Rather than just say it, you put the acronym out there. That can be a subtle thing that allows someone that may have had understanding or basic understanding of maybe price structure and delivery, and to have someone say to them, "Oh, just look for the open high low close or the open low high close," and that could have changed the entire dynamic of how they looked at price delivery. right? It doesn't mean, and it wouldn't have meant that they would have immediately gone from, suffering, struggling, losing to, multi millions. But what it would do is give the context under which they would be looking at price, how it delivered at certain places. If you're looking at a specific time of day that you're trading, like what is that price delivery? What does it look like based on an open low high close, an open high low close? What's it look like? And that is what I mean when I say information in the community could be shared in abundance, but everybody is not really going to take the same thing from, generalized information, unless you're just doing a weekly outcast or a weekly outlook and a forecast to say, hey, look, this is where price is, this is where price is going next week, this is where we probably get stopped out if we're wrong, and this is where we'll get to take profit if we're right. Now, if you do that every week, most people will look at that and they'll take it and they'll go, oh, okay. They might go look at their chart and say, yeah, okay, well, that's what he said, so I'm going to trust him and I'm going to do that. And some people, if it runs and it works, everybody's like, great, hey, that worked. And if for someone that didn't really understand how to look at that and there's loss, they would say, well, that person doesn't know what they're talking about. There are some people, and I would include myself in that sometimes, because it's what your capacity, it's what you're knowledgeable about, and it's what and how you understand certain concepts and ideologies that differentiates whether or not someone else is going to come in and say, you don't have a fucking clue what you're talking about. Well, understand, like, however you apply your knowledge and understanding in the market, that's going to be a personal thing. That's why this journey is personal. I do believe that even though it's personal, there is a community. You can share ideas. You could say, hey, look, this is, these are certain lessons and tips that have helped me along the way. And again, when people share like that, that's not going to apply to the whole community. I don't trade support and resistance. So for me to listen to somebody that trades support and resistance is not really going to help me. Now, have I watched or listened uh, support and resistance traders in the past that kind of helped me, maybe look at how a structure is being formed? Have I done that? I have. But the more intricate I became just studying price action, I don't watch those anymore. It doesn't mean that their content is not valuable. It doesn't mean that they know, more or less than I know. It just means that how they apply the information as they understand it is different from mine. Our results may be similar. They win some, I win some, they lose some, I lose some. So it's realistically just how simplistic or how mechanical can you make concepts that round out your trading plan that make you successful. That's it. And again, it's how it resonates with each individual person. So what I've done today might help somebody. Somebody else might look at it and go, look at it and say, well, that's dog shit. That doesn't help me. Okay, well then it wasn't for you. But there's somebody out there. There's somebody. Um, like I said, I was fortunate enough to come across, I would say, 3 4 different yeah, I would say four different individuals that gave me a framework and a perspective to stop looking at just a specific range, to stop looking at a stop loss and a take profit and a limit order. Because for a long time, that's what I was doing. And while it was somewhat successful and looking for breaks of structure and not looking for key areas for breaks of structure, like it was a hodgepodge and it was a hot fucking mess, to be very, very short and blunt about it. It was a hot mess. So, the ebbs and flows of being successful and right and these massive trades running for a month, and then the very next month trying to, replicate the same thing, doing the same thing, and failure, 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 loss, 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 loss. And it's like, what the fuck? It's the same thing. No, it's not the same thing. It's not time based. It's not rooted in overall price delivery. It's not rooted in a long term structural bias based on price delivery. There's no time element to it. Those things were missing. So I will hop down. I don't think I was on the soapbox, but I will hop down just in case, and say I appreciate you guys. It's been an hour and 15 minutes, so I appreciate it. I know this is a little bit more in depth from a biased perspective, but I felt, like I said, I felt obligated to do it. I wanted to do it. I enjoy doing these because anytime that you can add, again, context under why you're doing something, I feel like it doesn't explain it away like everybody else could look at it and say, oh well, he explained it, so that's why it makes sense. Well, that's how it makes sense to me, but I'm just kind of showing these are the things that I would be looking for based upon this initial amount of evidence that I have. And now, it's a waiting game until tomorrow and going into Monday to see what do we get, which, to me is exciting at this point. I'm excited to see what's the delivery, what's it look like, and how we can take advantage of it and take part of it. So again, I appreciate you guys' time. It is 90 degrees here in Florida, so um, I guess I'm going to venture out, go see what I could see for a little bit, and then come back and I don't know, play some games or relax maybe. All right, but you guys enjoy the rest of your weekend. Be safe. Um, Hope you have a successful trading week, and I don't know. I will probably, maybe, maybe, um, set up maybe another live stream maybe tomorrow night. I don't know. I'll update that on the community tab, but we'll see. All right. So take care. I'll see you guys next time.